they seem to have rebounded from those levels. They were in international about 2.5% up. Nilesh Jain, Head AVP Technical and Derivatives Research at Centrum, joining in today. So is Deepan Mehta, Founder Director at Elixir Equities. Deepan, I'm seeing that smile on your face. Are you believing that this is one Friday where we need not panic on what's going to happen over the next 2 days?
Yeah, first of all, thank you for having me on your show. Well, I think the game goes on.
Yeah.
And we are at the mercy of President Trump. Whenever he says positive about the Iran war, markets go up, global markets go up. And whenever he starts threatening Iran, then we see a correction. Then this game has been going on for far too long. But I think that maybe this time around, hopefully they are more serious. And basically, we should have a kind of a more progress on this peace deal. Let us see the exact outcome. The key number to watch, of course, is the oil prices. They are down just now. They should remain down. And from India's perspective, we need to have this, I would say, lower subsidy payments. So the oil price has to start to align and move towards the present petrol and diesel prices so that the subsidy element is out. And therefore, the kind of drain which is there on the treasury just now, that is curtailed. So I would say the key thing to watch for here is the oil prices. And if they correct further, then definitely our markets also can do well. And eventually, I think the fundamentals will start to reverse.
Deepan, you mentioned crude, and good afternoon to you. But what about rupee? Because ultimately this afternoon, and we're looking at the rupee hovering around that 95 mark. And remember, it touched the bottom of very close to 97. So are you looking at that very closely as well?
See, I think that the rupee will remain around these levels or so, even if the crude oil goes down. That's because Reserve Bank will take this opportunity for any inflows coming into the rupee, any dollar inflows. They will take that with both hands and try and increase their forex reserves. And the recent measures also which they have taken to encourage FCNR and ECB, all of that means that we should see a decent increase in our forex reserves. And that I think will provide even more cushion. So I think that rupee at 95 is the new reality. I don't see it going back to 90 or 88 like that. It never has happened. So we need to adjust to this new number of the dollar, and which is fine. I think from an investor's perspective, we now start looking at export-oriented stocks in more positive light, and some amount of the uncertainty around FII flows going out, that may be addressed if the rupee stabilizes and the overall forex situation improves for the country.
Nilesh, just on the Nifty and the Bank Nifty, what are the levels you see from here on? We had a speaker in the first half of the show who said that if crude continues to drop at this rate, he sees a 400 to 500 point upside on the Nifty in the next couple of sessions. Are you aiming that high?
Very good afternoon, Tamanna. Good afternoon, everyone. Well, absolutely. In fact, we have seen a major development today that is coming from the Bank Nifty, and that is providing more comfort now. After a long time, we have seen on the weekly chart, the Bank Nifty is up more than 4%, and also on the verge of another breakout above its 200-day moving average as well. That is placed around 57,000. So just in case if we see that breakout coming in, the target on the upside will open up for 58,000 to 58,500 for the Bank Nifty. And coming to the Nifty index, see, Nifty has already given a short-term consolidation breakout from the levels of 23,550. Now, the immediate target that we are expecting on the upside could be around 23,800 to 24,000. Yes, another 200 to 400 point rally can be seen in the Nifty index in the June series. So the overall setup has already turned positive. The VIX have cooled off sharply in today's trading session by more than 6%, below 15. So that is giving more confidence. And today's rally was more sort of driven by a short covering. So a lot of call writers got trapped at 23,500 shy, and they are covering their short positions. Yes, so the overall setup has turned positive. Bank Nifty is likely to lead the rally from here as well. And Nifty immediate target would be 23,800 followed by 24,000.
Actually, I completely forgot about the kind of short positions that you've had, particularly foreign institutions short to the extent of more than 90%. But I don't want to talk about individual stocks. Nilesh, what are you finding attractive at these levels?
Banking, as mentioned, we are liking the banking space. Still, after today's spurt of close to 3 to 4% in the index, I feel there is more room left on the upside. So first of all, Kotak Mahindra Bank, that's something that has given a good breakout, and we have already seen a good momentum as well. So we expect further upside towards 415 to 420. So these are the two targets on the upside, and the stop loss can be placed at 391. So Kotak Mahindra Bank will be our preferred bet, followed by Bombay Stock Exchange (BSE). We did see a recent retracement from the highs near about 4,400 odd levels. It has corrected all the way to 3,800. Now, once again, the next level of upmove have started. So we expect further upside towards 4,200 to 4,250 on the upside. So keeping a stop loss below 3,940, BSE is also a buy.
Okay. I mean, BSE, another buy after the kind of run-up it's already had. Just pull up the one-year chart of the BSE, because the kind of moves that you've seen on the BSE are at dizzying heights as well, about 46% odd. But if you're talking about dizzying heights and gravity-defying numbers, it has to be SpaceX. That mega listing today, we have a countdown on, 3 hours or to go. We have live programming, we have reportage from outside the NASDAQ when it happens. So please stay with NDTV Profit for everything on SpaceX. But meanwhile, let me go across to Mahima, who's doing a bulls versus bear. We do this every day on the show, but this time it's about SpaceX. And the reason we're doing it, Mahima, is that once it lists, people can technically go out and buy the stock in India as well.
Yeah, absolutely, Taman. And people should know both the sides of this IPO, right? And that's exactly why we are doing this bull versus bear. What I've tried to do is for each of its business, I've tried to pull the bull and bear case. So I'll start with the space business first. Here, the best part is that the Starship business that, everybody's been talking about, the Starship one has cut its cost by around 99%. It's certainly the most positive thing, but at the same time this is still in its testing phase with a zero commercial revenue. While a lot of funds are going into making this viable, the same time we'll have to see as to when this happens, because at the end of the day this is related to launching it into mass. The next one is the Starlink business, where almost 61% of the revenue comes for SpaceX. It's the only global low latency satellite internet with over 164 countries under their coverage. But if we take a look at the last 3 years, the ARPU for Starlink has come down from $99 to $66 per month, and still this business is running into losses. The next one is with regards to the AI business. Anthropic is set to pay around $1.25 billion per month for SpaceX compute through 2029. But at the same time, AI is losing around $0.6 billion per quarter, plus the capex is very high. For Q1 itself, it was around $7.7 billion, and it is going to rise from here on. So it is a very capex heavy business that they're planning to do. At the same time, it's also running into losses, all the three verticals. When it comes to the overall business, of course, the entire total addressable market is as high as $28.5 trillion. But if you take a look at the valuations and how the company has been into losses, priced at 94 times sales, price to sales, which is, like I've always said, beyond my understanding, and is sitting on losses of around $4.3 billion as of Q1 2026. So that's with regards to the overall business, but also with regards to Tesla and SpaceX merger. A lot of reports and brokerages are kind of covering this, and Wedbush believes that a Tesla SpaceX merger is possible in 2027, but this decision is not something that the public that is owning SpaceX will be able to make, because Musk controls around 85% of the voting share, and if he votes for it, that is going to happen. So this is with regards to the decision between Tesla and SpaceX. And lastly, overall conclusion of this bull versus bear, because yes, the company is building infra for the next century, which has an addressable market of $28.5 trillion, but at the same time, valuations, losses, etc. don't make sense. Plus, all the decisions are in hands of that one man, that is Elon Musk. So this is the overall view of the bull versus bear case of SpaceX.
I think that last point is a big bear scenario as well. The way I see it, 85% in the hands of Elon Musk. He basically, the only way he can be removed from that board is if he decides to sack himself.
Yes.
Apart from all of the outlandish claims and promises made in the IPO prospectus, having said that, how can Indians get a piece of the pie if they wish to?
Right. So now that, once it gets listed, there are just two ways. Of course, you can go ahead and just buy the stock if you have an international broking account. So that's one way, of course. And if you are already holding a NASDAQ index fund or a NASDAQ ETF, in the next 15 days or so, it is highly possible that SpaceX gets included in the NASDAQ 100 after 15 days, of course. And that's how, you will be able to, have a share of SpaceX. But there are, of course, two requirements for this one. First one, you need to have an international broking account, and secondly, the amount of the total amount that you can invest globally as per the liberalized remittance scheme stands at $250,000. So this is how if somebody sitting in India wants to be a part of the SpaceX company, this is the route. This is the route via which you can do it.
Yeah, and if there's a Gift City fund perhaps that invests in SpaceX eventually, now or later, that is also something that you can use to have exposure. But bear in mind that if you're putting over 10 lakh rupees through the LRS route out, then as soon as you cross that threshold, there's a TCS, that's a tax collected at source that comes in. So 20% of whatever you put out beyond that point gets locked into tax collected at source. So effectively, if you're putting 10 lakh beyond that, you can only put in 8 lakh, and the rest you can net off with certain tax transactions that you will do over the course of the year.
Here. Okay, so do your math. It's not impossible. And first of all, just wait and see what happens with SpaceX. Deepan, are you feeling FOMO looking at what's happening with SpaceX? Or are you finding ways to invest?
Where is the FOMO? You can't invest, period. And I think you covered it very well. And I heard twice you said, your partner said over there, a colleague said, that doesn't make sense, and that doesn't make sense.
But that's her assessment. That's her, the way she's seeing it.
Assessment.
Okay, you agree with it.
I agree. It doesn't make sense.
Why do you think these crazy, 4 times subscription, 30% for retail investors? What are they seeing that we're not understanding?
Well, I think that if this one really lasts and generates great returns from listing, then we'll have to redefine what do you mean by a bubble. I think 94 times sales and 4.8 billion losses, and still the stock goes up like a $1 trillion valuation. I don't know. I mean, it just doesn't gel with me.
There's a reason, I guess, also why Christopher Wood has called this particular IPO also the peak of the AI euphoria. And we've seen this song play out before. Maybe the words were different, but the rhyme sounds similar. Certainly, the dot-com run-up, ultimately you saw some similar euphoria. You probably see it. Do you see parallels?
Yeah, well, I think that maybe it's not reached over there. There are pockets of outperformance, but the core hyperscalers are still at reasonable valuations. The 2000 bull market, the 2000 bubble was completely different. It was like this, lot of loss-making companies going at crazy valuations. So I think we are getting over there. It'll only end with a bubble, but I don't know whether we are actually over there as yet.
Strange to me is the total addressable market figure.
20 plus trillion
dollars. $28 trillion. Now, how are you? Is this intergalactic? Is it basis Earth? Does it include Mars? I'm not even making a joke. Does it include Mars, the moon, and the asteroids that will be mined?
I have no idea.
Is it the data centers in space?
As Parag Bhai says, sometimes this is outside my circle of competence.
Okay. Walchand Nagar, NTPC, as well as Hindustan Construction Company shares are buzzing in trade, largely on account of government's relief on imports of goods used for nuclear power generation. Varsha joining in with more details.
Well, yes, all three, rather Walchand Nagar and HCC, they are buzzing in trade as government has removed custom duty when it comes to nuclear imports, and this applies to past imports from 2019 to 2026. That means companies don't have to pay any pending tax, which reduces financial risk for nuclear projects. Now, the key policy change over here is earlier exemption were announced till 2035 in budget, now extended backwards to cover past imports, which removes uncertainty over past tax liabilities. How is going to have an impact on project cost? Of course, zero duty lowers overall project cost, which help reduce cost of electricity generation and also improves the viability of nuclear projects. And this also encourages faster execution of projects, supports capacity addition in nuclear power as well. Onto the private sector push, this supports investment under Shanti Act 2025, which improves returns for private participation and makes nuclear sector more attractive, and hence Walchand Nagar and Hindustan Construction, that is HCC, are buzzing on the back of this news as of today.
All right, thanks so much for that. And these are par for the course, really. Walchand Nagar up about 9%, but guess what is close behind? With gains of about 8%. It's a Nifty 50 stock. It is Shriram Finance, which has proved to be high beta in the past. But Nilesh, the question is, from these large caps, would you pick any to ride what could be a build-up in momentum in a few of these names, or would you hold your horses and wait for the real news to come through?
Well, Alex, most of them have already given a very strong run-up. If you see SCC, Walchand Nagar, both are up in the range of 8 to 10%. So first of all, it's not advisable to chase the momentum after this kind of a price spurt. Better strategy would be to wait a while, wait for a sustainability of this particular move. But on the other hand, if you see NTPC, we have seen a very strong rebound from its 200-day long-term moving average. So that can be a reversal play, a pullback play, I would say. Maybe towards the levels of 365 to 370 kind of level can be seen on the upside on the back of a pullback. So keeping a stop loss below 347, so risk and reward is looking favorable to play this particular pullback. But yes, coming to the NBFC space, you did mention about Shriram Finance. But if you see LIC Housing Finance, L&T Finance, or Bajaj Finance, all these NBFC counters have given a very strong rebound and a breakout as well on the chart. So yes, Shriram Finance is going to be our preferred bet within this particular space, and we expect further upside move towards 980-2000. So keeping a stop loss below 920, one can buy the dip in Shriram Finance.
So, Deepan, what do you think is the primary reason that some of these companies are back in vogue? And as Alex is pointing out, bond yields are down. That could be one key reason. Is it also because with crude prices coming off, maybe auto sector gets another boost, and at least the Shriram Finance has a sizable vehicle loan book?
Well, I think could be some institutional order also. I think Shriram Finance is a well-discovered company.
Yeah.
And massive capital infusion. So we expect the company's growth rates to improve as well. And in times like this, when interest rates are rising or maybe rising and liquidity is scarce, I think NBFC, the Shriram Finance, will have an edge. Nothing specific new has happened in terms of any fundamental development or any news flow. It's just that sometimes these stocks, which have underperformed and which have been lagging, they come into limelight, and it's not that these counters are very liquid. So concentrated buying by institution can have this kind of a rally. But on the whole, I think, the linkage of oil price to inflation to interest rate, that is being played out in the markets with the way the Bank Nifty and the related NBFC stocks have done well, because the real threat over here is if the war gets extended, oil prices remain at elevated levels, at some point of time, RBI will have to increase interest rates, and that certainly will have a very sharp negative impact on the net interest margin of the entire lending community.
Deepan, just your point of view on the earnings outlook, right? It's in any case, it's a hard exercise to take up. But in this kind of a scenario where you don't know where things are going, and crude oil prices have cooled off dramatically, perhaps earlier than some people had anticipated, would you wait for the Q1 numbers to come through? And do you also anticipate that this kind of a knee-jerk reaction, you might want to hold off before you jump in whole hog into some of these names, right? Because you could have a rude awakening when the numbers come through in Q1.
You're right. I think what bothers me the most is Q1 and Q2. It's going to be very challenging. You may have some kind of bad news or some accidents also when the corporate results are out, because companies' business models have been stressed as the supply chains have been challenged. They have had to absorb unusual high increases in costs also. So I'm very, I would say, perturbed about how Q1 and Q2 will emerge. But the key thing is that Q1 results start to come off somewhere around July or so, middle of July onwards or so. By then, I think if oil prices have cooled off, and the war is over and done with, then investors will just say, okay, this Q1 was an aberration and things are on the mend, and therefore, they will take that in their stride. So, if there are negative quarterly numbers for 1 or 2 quarters, investors will discount them and look for the period beyond these first 2 quarters as to once things get back to normal, then what the fundamentals look like and what the earnings growth is looking at. But let's just wait and see. I think, it's very difficult to call when the war will end, and after the war will end, what will be the situation in the Gulf, whether oil will flow freely or not, where will be the oil prices. It's just we are dealing with too many uncertainties over here. So either you have to extend your horizon for investing or just stay out for the time being.
Okay, just very quickly, Nilesh, Shriram Finance, Ashok Leyland, both on the charts.
Well, Tamanna, both the stocks are looking strong. In fact, after a spurt of 10%, Ashok Leyland has given a good breakout from his 7-8 sessions of consolidation. So looks good for a follow-up more on the upside towards 158 to 160. And Shriram Finance, as mentioned, I'm also bullish on this particular counter for 980 to 1000 kind of target on the upside. So if somebody's already bought it, then stay put. If somebody wants to invest fresh, then wait for some bit of decline in terms of making a fresh entry.
Clients, maybe depending on what happens on the weekend. Thank you so much, Nilesh and Deepan, for joining in today. We didn't get a BTST from Nilesh because it's very tough to take any calls when things are so fluid.
Yeah.
Well, I don't know if